Welcome back. With the escalation in Ukraine over Russia's attacks, many are wondering what this means for their investments, retirement, and the overall impact this could have on our stock market. I spoke with Chris Burns, a financial advisor with Burns Estate Planning, to get an expert opinion on the current situation. With the most recent advancements between Russia and Ukraine, based on your knowledge, can you just kind of break down in the simplest form for the rest of us to easily understand what this could potentially mean or impact in relation to stocks?
Yeah, of course. So what we've seen today is we've seen the initial stages of Russia's invasion of Ukraine. And you can call it an invasion, a peacekeeping mission, or whatever terms Russia or US is throwing out at it. They are currently putting foreign troops in Ukraine right now. So what that's going to do with markets, and we saw that kind of in the pre-market this morning, markets started out very, very negative. And then as the day has progressed, we've seen some recovery, and that's based off of a few things. People kind of wanted to see what the West was going to do from a sanction standpoint and how severe they were going to start out. Because there are some sanctions that will actually bring some pain to the West. And when I say the West, I mean Europe and the United States. And there are some sanctions that are really more just tailored and focused towards Russia. So probably the biggest thing that we're going to see is this is not going to help with inflation on the short term. This will probably, in the short term, increase inflation. We should most likely expect the price of oil and gas and petrol products to go up in the short term as everyone kind of reevaluates their relationship with Russia and how that relationship is going to work with the new sanctions that are going out.
I have the same question, but geared more specifically towards a lot of people are wondering about investments and retirement as well.
So, I mean, the big thing is when it comes to how is this going to affect your investments in retirement is you need to understand where you are in that retirement timeline, right? If you're already retired and you're taking money out of your portfolios, you're gonna have a much different outlook on this than someone who is, less than a year or two away from retiring. And then someone who is, 10 plus years away from retirement. I mean, this is a buying opportunity for them. So you need to understand where you're at in your retirement timeline. And then from there, make sure that your risk that you're taking is proportional to where you are. And so talking about how is this going to affect your retirement accounts? Well, let's talk about really the big three things that are moving markets right now. Obviously, the first thing that's on everybody's mind is war in Eastern Europe, Russia and Ukraine. Well, the two, I would say that from a humanitarian standpoint, it's terrible, right? But from a financial standpoint, from a market standpoint, what's currently going on with inflation and then also with the Federal Reserve raising rates, and we're going to see what speed they do it at, that's going to have a bigger day in and day out effect on markets. Because when you take a look at the total GDP worldwide that Ukraine and Russia bring to the table, it's small. Now, this is an incredibly large humanitarian problem. But from a financial market standpoint, and what we've currently seen right now, the stage just within Ukraine and Russia, this could be a 1 to 3 or 4 month lag, and then we could probably start to see the world digesting whatever sanctions come out. What's that's done to inflation? Has that changed the Fed's opinion on how they're going to raise rates? They're all kind of working together, but really the big thing is that people need to focus on when it comes to retirement is my portfolio from a risk standpoint in the correct investment? And then am I able to offset what's currently happening with inflation? Is my portfolio built this way? And if you answer either one of those questions as I'm not sure, I don't know, right? You should definitely have a second opinion with someone, a certified financial planner or a financial advisor. Not saying, if you do it yourself, I'm not saying, hey, go hire a financial advisor, right? But have someone stress test your portfolio. And then from there, if that conversation leads to, you doing business with them, fine. But at the end of the day, you need to understand, because half of a financial advisor's job is education, and having the education to understand to hear the noise, digest it, and see what that means to the individual investments inside your portfolio, that is incredibly important right now.